I'm joined by Stanley Onuorah, an economic analyst. Thank you so much, Stanley, for joining me today.
Thanks for having me today. It's good to be here.
Definitely. So, I mean, we're talking about the recapitalization by banks. So far, what has been your thoughts following the process, and what are the key takeaways for you?
So it's been an exciting process, especially with what has been happening in the economy. So if you check what happened in 2004 when the last recapitalization happened, if you check the dollar figure towards the dollar figure of what we are recapitalizing now, it just seems that we're going at par or just above what we had then. With the current realities and facing global shocks, we could see like the war that is happening, and any other shock that was to come up within the global economy, you needed banks to be resilient enough to be able to overcome that. So it's an exciting process by the central bank, and you can see the banks that have come up to meet this recapitalization and the speed that they have. It shows a lot of depth too. So yeah, it's been an exciting process so far.
Right, that's quite interesting. I mean, banks have been able to get over 5 trillion naira so far, and then what percentage of that is foreign investors driven? You may not be able to say the exact percentage, but just give or take. So
the foreign investors have brought in about 28%. About 28% of that money has been foreign. That comes up to about 1.1 trillion naira. So it shows, and then the local investors, I think about 2.9 trillion. So that comes up to a significant sum. It shows that there's a lot of interest. 28% is not small. It shows a lot of interest from the foreign investors in what is happening in the economy, and it's a healthy mix of capital.
Right. Looking at what has been raised so far, now, what does this say about the banking sector, really? And I want you to also look at the composition, especially when you go to the market. What's the composition? Are we seeing a situation where the listed banks are the ones who are really driving this recapitalization?
Yeah, obviously. So the top six, so the First Bank, the GT, the Fugaz, I'll add Stanbic to it. The First Bank, the UBA, the GT, the Access, Zenith, and then Stanbic. So you see that it was a lot easier for them to meet the recapitalization. They had access to the market. Some had rights issued, some had private placement. So what you now saw was that a lot of these banks, because of their standing, institutional investors foreign investors that were going to come in would prefer to come in with this, the blue chip, the bigger boys, and they already had access to the market. So the market confidence would just naturally switch to them. It's a case of the will have been able to eat the bigger fish. So yeah, it has helped them. But still, you could see a lot of smaller players, like the tier 2 banks too, that have come up to meet the recapitalization, showing you that there's a lot more, there's a deeper interest in what is happening in the economy. And it still points to a macro and people having faith in the future of the economy, what is happening with the whole reforms that is going on in the economy, and they are betting on a better outcome for the economy. So it's a combination of both.
I don't know if you would like to comment on FCMB, because, looking at FCMB, Tier 2 bank and all of that, I'm wondering why it's taking them a lot. And then they are going to be selling assets so they can, get that 500 billion. I mean, what do you make of that?
So they were in the market to raise capital. They got subscribed, and they are still. So it's a combination of still having an eye on what the bank is doing internally. It's not just FCMB. There are quite a number of them still trying to meet the deadline. We're expecting that first of all, there's a regulatory oversight that is very strict on this exercise. So for them as a bank, I see that they are doing everything that they can. I don't know about the private placements they have, what they have backed up, because everyone has their own strategy. But you can see an effort from them. There's an eye on them. I want everybody to keep an eye on them. But I see them scaling through. If not, at least there are measures and acquisition options that are available to them.
I mean, should investors be cautious or wary?
You're first of all, as a depositor, first of all, you have nothing to worry about your monies.
I'm talking about market.
So you in the market that you're looking at this. So what do you see post-recapitalization. If there's a merger and if there's a merger with a smaller bank of the same category, you don't know what they have, what they can spring up. If there's an acquisition from a bigger player, that's your investment going into that. And most times, you could use some of the mergers and acquisitions that have happened in the past. You see that a lot of the investors got bought over at a higher price, always. So for most investors, it's just a case of sit, watch, and see how it plays out. But most times, it plays out in your favor, especially if there's an acquisition of that. In trying to buy you out, I'm trying to offer you money to sell to me. So I'll offer you a higher price than what currently is available. So for the investors, it's a good play if they get to that point. But as a bank, I'm very optimistic for them that they scale through. If not, there's the option of the acquisition of mergers.
All right, so post-recapitalization, what do you see?
So there's been, first of all, raising about over 4 trillion. And I see at the end of the recapitalization exercise, us hitting about 5 trillion. It's a step, it's a pointer to the ability for the banking sector to raise that amount of money in that short period. And
2 years.
It's 5 trillion. 5 trillion. So 4 trillion, I expect that gets to 5 trillion. So now, aside the local investors that came in, for foreign investors to come in, you could see the talks with people like, I think, UAE investors and investors from other countries around the world. So it tells you what they see in the economy. And mind you, this money that is coming in, it still has a play into the real sector. So if you look at the past recapitalization, the biggest beneficiaries of the last recapitalization was the telecom sector. So now, what is going to happen with the recapitalization funds that is going to be injected into who are going to be the biggest beneficiaries? So if we think of things like power, for example, there are legacy problems that exist there that, if they can sort out, is still a major driver. So whoever becomes the next beneficiary of that capital.
Who do you think will be?
So I'm going to be betting on power, manufacturing, because that is the real sector. That is what is needed to drive growth. But you need power in the sense that the manufacturing sector wouldn't work without power. So it has to be unlocked. Once it's unlocked, it has its other multiplier effects around the economy. So you see the manufacturing industry is picking up and we've been able to export, and you don't need to bother about your Naira being strong again because you're exporting and you're making a lot of money. Jobs flow, people are employed, you can get more taxes. So I think it's a critical sector that must be unlocked for the government for them to be able to achieve their aim. Because they are aiming for a 1 trillion economy. You need to grow at 12%.
$1 trillion.
$1 trillion economy. You need to unlock power. You can't do it without power. You need to grow at about minimum 12% per annum. You cannot grow at 12% per annum if you don't have power unlocked. We have insecurity problem around the country. A lot of the restive youth are not employed, are not gainfully employed. Who would employ them? Industries, SMEs. So if you can unlock that sector where the power sector is moving, I'm emphasizing power. You see, I'm not even going to the security aspect of it, because power alone unlocks a lot. Even our educational sector, which is supposed to bring the technical know-how back into, needs power. You need your children to be able to have adequate food. We're losing a ton of food to lost harvests and still power. So yeah, if you can unlock power, it unlocks the economy as a whole. So yeah.
All right, thank you so much, Stanley Onuorah, for coming on the show.
Thank you. I appreciate your time.
All right.